Ever wondered what truly sets apart candidates in the most competitive finance interviews, helping them land those sought-after investment banking or private equity roles? It often comes down to their grasp of complex valuation methodologies. To master leveraged buyout valuation concepts for finance interviews, you need a solid understanding of the transaction mechanics, the components of a robust financial model, and the key value drivers that private equity firms focus on. It is about demonstrating both technical proficiency and a strategic mindset. This specialized valuation technique is critical because it models how a financial sponsor acquires a company, primarily using a significant amount of borrowed money. Interviewers want to see if you can think like an investor, assessing risk and return in a highly leveraged scenario. It showcases your ability to analyze a company's cash flow generation, debt service capabilities, and potential for operational improvements, which are at the heart of private equity investing. Start by building a foundational knowledge of the typical LBO capital structure, including senior debt, subordinated debt, and equity. Then, practice constructing a three-statement financial model that projects the target company's income statement, balance sheet, and cash flow statement for 5 to 7 years. The core of your LBO model will involve setting up debt schedules to track principal repayments and interest expenses, which directly impacts the cash available to pay down debt. Next, you will need to determine entry and exit assumptions, such as enterprise value multiples or internal rates of return. Finally, calculate the equity returns for the financial sponsor based on their initial investment and the proceeds received upon exit. Pay close attention to how changes in operating assumptions, such as revenue growth or margin expansion, flow through to the ultimate equity value. A key insider concept to understand is the concept of a multiple arbitrage. This occurs when an investor purchases a company at one enterprise value to earnings before interest, taxes, depreciation, and amortization multiple, and then sells it at a higher multiple later on, generating significant returns purely from the multiple expansion. Another crucial area is understanding the debt covenants that might restrict a company's operations or dictate debt repayment terms. These details reveal a deeper level of analytical thought. By systematically working through these components and understanding the interplay between a company's operations, its capital structure, and potential exit strategies, you will be well equipped to articulate your understanding with confidence, impressing interviewers with your comprehensive grasp of LBO valuation and your potential to contribute to their team.